Good morning, everyone. I'd like for the background team to confirm that I'm audible enough. Okay, all right, great. Thank you for joining us. I'm seeing that we are still streaming in. And as we are doing that, I'd like for us to request, because we are convening entrepreneurs and possible clients for your business. Kindly introduce yourself on the chats. Let us know what business you're running, where you are from, where you're running it from, and your next customer might just be here. So please feel free to drop in as we are waiting for others to join. I know we are a few minutes late. Apologies for that. We had some technical hitches. So, but we are glad that we are here now. So please feel free to introduce yourself and your business on the chat box as we are waiting to start in the next 1 minute or so. Today we'll be having a very interesting conversation, and I will let you know more about it as we are moving along. Okay, still waiting for the introductions. Don't be shy, guys. Don't be shy to introduce your business. You want a customer, you always have to put yourself out there. Okay, great. All right, so, okay. I see we have Nancy Jerry. She says she does tailoring and hair salon. Where are you doing this from? Where are you doing this from? Let us know your locations as well. Thank you, Nancy, for that introduction. I'll keep reading as we are moving along, and in the interest of time, I'd like to start our session today. And I'll just start with just a small round of introduction of who we are. I'll be your moderator today. My name is Lois Masharia. As you can see, I work with WYLDE International as a strategy consultant. What that basically means is that I help businesses make better decisions. A lot of businesses are failing because of the decisions or the choices that we are making every day. So my work as a strategy consultant is to ensure that you're making the right decisions to better your business or better businesses. And so today's session, we are partnering, it's a partnership between WYLDE and Raisin Capital. To bring you this session today, which of course I'll give more details on. But first, just to introduce the partners, I'd like a few remarks from WYLDE as well as Raisin Capital. And so I'd like to start with WYLDE first, and I'd like to introduce Robert Njeka. Could you please come on and give a few remarks?
Thank you so much, Lois. Please confirm whether you can hear me clearly.
We can hear you very clearly.
Fantastic. Thank you so much, Lois. So as Lois has mentioned, my name is Robert Njenga. I serve as the head of marketing and partnerships at WYLDE International, as Lois has briefly mentioned. For those who are not very familiar with us, we are a consulting firm that has been supporting SMEs for the last 21 years or so, primarily supporting them to make better strategies so that they can compete in the market with confidence and with clarity. Above and beyond that, we do support SMEs with various interventions. And one of those interventions is webinars such as these. One of the things we've noticed over the last 21 years we've been in existence is that SMEs typically have a huge information gap. Lack of information typically leads SMEs to not perhaps compete as well as they should in the market. Lack of information more often than not, typically leads SMEs to perhaps not have the clarity and the structures that they require to be able to be competitive in the market. So that's why we started this webinar series, to be able to bridge that gap, where we are trying to see what are the key challenges or pain points that SMEs have, that we can help them with and shed a bit more light on. One of the key challenges that we've identified that SMEs typically face is access to finance. So access to the right finance has been a big challenge for SMEs, not just in Kenya, but across the globe. As such, we thought it would be prudent to partner with our fundraising experts here at Raisin to be able to shed light on critical questions that SMEs that we serve tend to have. Is it questions such as, when should I raise as an SME? What are the right channels to use when I'm looking to fundraise? And perhaps more importantly, what is the best approach to use when I'm looking to fundraise for my SME? And we hope with this session, we'll be able to answer all those questions for you, so that when you go back into the market, you have the confidence to be able to look for the right funding at the right time. If you're familiar with WYLDE International, you do know that we never show up without some goodies. So I would really, really encourage you to stay with us until the end of the webinar. We do have some goodies for you that will help you in your fundraising journey. So please stick with us until the end of the webinar, and enjoy. Gain as much knowledge as possible. The way we designed this session is that we didn't want any fluff, any unnecessary fluff with the session. We just wanted you to get real answers to real questions. And we do hope that you will receive that during this session. So I think with that, Lois, let me hand it back to you so that you can tell us what you have in store for us next. Thank you, Lois.
All right, thank you. Thank you so much, Robert. As Robert has said, please feel free to check out what WYLDE does. Whether it comes, whether it is your strategy, whether it is your strategy execution or your team development, WYLDE can help you with that. And so I see Kiganda Ian. He says he's a startup, specifically in fintech, and he's from Nairobi, Kenya. So thank you, Ian, for also confirming that. Millie, welcome. You're in the e-commerce industry, flowers and gifting, Kenya. Oh, that's a lot, which is great. So the next remarks will come from Raisin Capital, and I'd like to bring on board Penny. Penny, okay? Kindly give a few remarks on behalf of Raisin. Do we have Penny with us?
Yeah, I'll take that, Lois, if that's okay with you. My name is Faith Nanga, an associate at Raisin Capital. Raisin Capital is a transaction advisory firm in Nairobi. Since 2019, we've been helping businesses to access capital. And we are sector agnostic. That means we do not choose the sectors that we help. And what we do, we just don't do it in Kenya. We do it in other countries such as Tanzania, Somalia, Uganda, Rwanda, Ethiopia, and the larger Africa. So we do have 4 products through which we use to help businesses. And that is, we have corporate finance advisory, we have capital raising, we have capital connect, as well as impact and program advisory. What we do under corporate finance advisory is basically just help businesses in standalone services, as well as capital related services. By this, what we do is we prepare the financial we do financial modeling, we do valuations for the businesses, we support in sell side due diligence. We could also help you be investor ready, that is preparing pitch decks needed to converse with investors, as well as models that entails the projections that you use to pitch. We also support in capital structuring. We'll discuss that as we move, as well as supporting due diligence. We do opportunity cost analysis, as well as independent business reviews. Under capital raising, we help businesses to secure funding. And of course, we're going to delve into that during the session. That means we match you to the suitable investor. We also support in term sheet negotiations, as well as structuring of the deal. My colleague Charlene will address the other 2 products.
Thank you, Faith. Like she said, we do have 4 product offerings at Raisin Capital. So I will touch on impact and programs advisory. So this is specifically helpful to SMEs, which majority of the attendees today are. So with Impact and Programs Advisory, we do help with technical assistance for SMEs through investor readiness programs, curriculum development, training, and coaching. We also do grant concept, program development, delivery, and management. We also have an online fundraising platform called Capital Connect Africa. This is what we like to dub as the fundraising marketplace for Africa. So through that platform, we offer capital raising tools, as well as help SMEs get investor ready, investor prepared, and eventually match you to investors. So it's essentially a one-stop marketplace for businesses, investors, and also advisors such as us. So thank you so much for this opportunity. Over to you, Lois.
All right, thank you, Faith and Charlene. I wouldn't think of a better partner to have this session with. And so, if you'd like to get to know more about WYLDE and Raisin Capital, check out the chat box. There are we have socials and we have phone numbers that will help you reach us. So. Once again, I'd like to thank you all for joining us this morning for this very much needed conversation. Conversation on money or funding will always come up during an entrepreneur's time of running the business. Sometimes it would come up very heavily at the point of launching the business, but then it could come at the point of restocking or cash flow or expansion. And now, given the importance of funding in a business, quite a number of solutions have come up. Those that we know as conventional ways, as well as those that we are calling alternatives at the moment. Now, this is great. However, it's quite sad that this information is not very well known to those that it has been created for. And so there is need to have more of these conversations just to ensure that the right information gets to the right people. Yeah, and that is why we are here today, to get the right information and to be informed. Why? Why is this important? So that we as entrepreneurs are able to make better decisions, and better decisions will help us get to better businesses. And so today we are joined, as they've said, with Faith and Charlene from Raisin Capital, who will help in answering some of the questions that you guys sent. This is not a typical webinar where we've curated a specific conversation to have. Rather, we requested for you guys to send in your questions, your very own questions, then that will form the basis of this conversation. So every question that I'll be asking today has come in from you guys through the registrations that you did. So be sure to also check out WYLDE socials for more of these Q&A sessions that we are saying that we are having. Today is just fundraising, but next time there is other subject matters that affect entrepreneurs at large. And so someone here might be asking, okay, who's Faith, who's Charlene? Yeah, and I'd just like to read a bit more about who they are, so that we get context of what they have done and their competencies in this. And I'll start with Faith, who is an investment professional with expertise in transactional advisory, investment research, financial modeling, and valuation. She has managed to help businesses access capital and channel it towards meaningful impact, guiding them through the fundraising journey, from developing pitch decks and financial models to leading investor engagement, managing due diligence, structuring deals, and closing investments. So there's a lot there. As entrepreneurs, we really do need the assistance that Faith is able to offer. However, her focus spans both equity and debt, delivering clarity and structure to complex financial decisions. Faith holds a Bachelor of Commerce degree in finance and has earned certifications, including the Capital Market certificate from New York Institute of Finance, Financial Market Analysis, and FMBA. She's currently CFA Level 1 candidate, CFA Certified Financial Analyst, Level 1 candidate. So, Faith, once again, thank you very much for joining us today. All right, I'll proceed to Charlene. Charlene Kimaru is a skilled corporate finance professional with extensive experience in capital raising and corporate finance advisory. You'll tell us more about that, Charlene. So we might be wondering what corporate finance advisory means. She holds a Bachelor of Science degree in Applied Statistics and is currently pursuing a finance professional certification, CIFA advanced level, where she has gained a comprehensive understanding of financing principles and investment strategies, solidifying her expertise in the field. Charlene has over 5 years working experience in financial modeling, business valuation, and producing comprehensive and high quality reports. She also has experience in developing investment documents such as teasers, pitch decks, and information memorandum for clients, as well as transactional structuring, having closed deals in the financial services and renewable energy space. So already from those bios, welcome Charlene, you can tell that we have a very able team to help us answer some of our questions around fundraising. And so yes, thank you for the reaction. Please welcome them as they come in to share the knowledge, and we do appreciate the time that you have created for this. And so, just to delve into the session today, which is Ask an Expert series, specifically fundraising, I'd like for us to start understanding what fundraising is. Let's start on the same, notes. I think I'll hand this over to perhaps Charlene to help us understand what is fundraising and what are the basics of fundraising so that we have a clear understanding moving forward.
Thank you so much, Lois. So I think to start with, even before I start with its definition, would like the audience to understand that fundraising is both a strategy and a process, meaning it's not an event that we come and we fundraise. So that's why we like to say capital raising, because I think in Kenya, the understanding of fundraising is like Harambee and things like that. So capital raising is a strategic process of securing capital to either grow. So by grow, meaning you either want to increase your product lines, you want to expand to new markets, or sustain your business in its current form, meaning either you want it for working capital or purchase of new assets and things like that, so that you can transform and grow your business. So I'd like to say at this point, that is what we can say capital raising is as a definition. Yeah.
Okay, great. And then what are the basics then of fundraising? What are the, types of fundraising? What is the cost of fundraising? Who is even giving these funds? What are our options out there? Maybe I should throw it to Faith, and Charlene can add as we proceed.
Thank you, Lois. So some of the things to look out for, or rather some of the things that we need to understand while we are fundraising is, as an entrepreneur, you need to understand why are you raising? What is the use of funds? What structure are you looking at? When we say structure, would you prefer debt? Would you prefer equity? And also that drives to what type of investors are we looking at? Because at the end of the day, you want to be aligned to the right investors. You also need transparency and trust. Like Charlene says, it's a process. We have parties on the table. You need to be open about it and honest about the business, and also time. Charlene has said something that is very important, that this is a process. That means you need to ensure that you have enough time as you're raising funds. But what you mean with that is you should not raise funds when you need them, because by the time you need them, that means you're almost desperate, and it's normally a process. So time is also a factor. When we look at the key metrics that we tend to, or rather someone needs to track, we're looking at how much do you need to raise. As you go out there to raise capital, you need to understand how much am I raising. You also need to understand the investor criteria in this, because as you go out there to talk to investors, you need to understand that the investor I'm talking to is aligned to my business. By this, we mean the ticket size. Ticket size means the amount you're raising. The structure you're raising could be grants. There are investors who are not open to grants. We have debt, we have equity. Also, you're looking at the geography, or rather the location, because you have investors who are maybe not open to investing in where your business is at. You also need to look at the time. I think we've mentioned that, as well as the cost of capital. In this case, we have the two structures, the debt and the equity. Both do have the pros and cons. And of course, we'll go deep into the details during the session, as well as the post-funding impact. not just accessing the funds, but after accessing the funds, you need to ensure that whatever you had intended to do with the funds is actually done. The types and the instruments of fundraising that we look at, we have quite a number. We have the bootstrapping, normally done by founders. We have family and friends. The good thing about this, it has the cost of bootstrapping is a bit low, but the disadvantage, rather the downward side of it is you have limited scalability. It's most likely preferred for early stage businesses. Then we have the bank guarantees, whereby it's done by banks. We have the DFIs, and we're looking at a high collateral, and a lot of formal documentation is needed. This is done for businesses that have assets, because this is an asset backed facility. We also have the debt financing. Who gives debt? We have the banks, we have microfinance institutions, we have SACCOs, as well as some of the institutional investors that we talk about. And the characteristic of this is we have interest rates as well as repayment pressures. Of course, with interest comes the repayment pressure. Who needs this? I mean, a business that is looking for working capital or maybe stock financing, this is an ideal one. We also have the equity financing, whereby we are looking at the likes of the angel investors, the venture capitals, as well as the private equity firms. And one thing about equity is you will have to seed your stake. That means you will have to, in most cases, there's the illusion of ownership. And for this, we tend to advise for businesses that are more mature, or rather at the growth stage, more scalable business model. We have the grants that most SMEs tend to look out for, and we're looking at the donors. We have foundations as well as government. It's a bit competitive, and of course, it doesn't need to be repaid. Most ideal for social enterprises. And of course, like we had said, you have the crowdfunding, whereby it's a public platform. Now, most of us know of something like Mchanga, such. And for this, you need to market, of course. We need a story to it, because it's the public putting in money into this. So a bit of trust, and yeah, it's a community-driven type of funding. Charlene can add.
Thank you so much, Faith. I think you've said it all. Like she has said, maybe if I can just summarize the key elements is, first of all, know your why. Like she has said, you need to know why you're fundraising, for what purpose. The other thing is you also need to know how much do you need. Like she has said, you could say you want 10 million, but to do what? And specifically, once you start fundraising, you'll realize that people who also want to invest need to know to the dollar or to the shilling where this money is going, because we've also had instances of people saying, I want to raise money, but when you later come and do monitoring and evaluation, they cannot account for what they did the money with. Also, you need to know your audience. Like Shia said, you need to align your business needs to the right capital partner. At the end of the day, different investors have different requirements. You need to have a story to tell. A convincing pitch will beat sometimes such a scalable business, because you understand your business, you know where you want to take it, and also be ready. You need to be ready emotionally, psychologically, because also capital raising is also not for the faint-hearted. I think I'll summarize it at that.
Okay. That is a lot. Please remember you can drop in your questions using the Q&A option. Share your questions and we'll get to them. So just to also just uncover or unpack what you have mentioned. You've mentioned VC, we've mentioned angel investors, and perhaps we hear these words, but what does it actually mean? Who is an angel investor? Who is a VC? What is the difference between all these people and these terminologies? Charlene?
Okay, that's a very good question, Lois. So we like to categorize them based on the businesses they look at. So for an angel investor, in its name, they're angels. They're people who have come to sort of save you. So an angel investor invests in a business that can be even at idea stage, meaning you don't have proof of concept yet, you don't have any initial numbers to pitch, but they believe and trust in you as an individual. So angel investors, it's more of the trust they have in you as an entrepreneur, you as the promoter of that business or business idea. So they typically invest in businesses at an ideology stage. For VC, that is the venture capital. Sometimes we get into using the the acronyms that we're used to. So these are investors who invest in businesses at the very early stage. You could only have done your business for 6 months, 8 months, for 9 months, for 1 year, but they're still willing to look at you based on the trajectory or the path to growth that your business has. So those are what we call early stage investors. VCs are early stage investors. So they're usually into high growth, high scale. Then we have the private equity. Private equity are investors for stake in your business. Typically, this is more suitable for businesses that are in the growth to mature phase, because at the end of the day, they also require a rate of return. So this will be more guaranteed in a business that already has proof of concept, has already done maybe 3 to 5 years of business, has a loyal customer base, has recurring revenue. Because at the end of the day, they also have a long-term outlook to how they invest. They invest in you and probably would exit at 5 or even 7 years. So at the end of the day, they would like to invest in mature, stable businesses. We also have what we call institutional investors, or development finance, DFIs, development finance institutions. These are the institutions that have been backed by sovereign wealth funds. For example, I can use something like BII, that is the British investment firm of the UK government. So institutional investors are investors that have the backing of their sovereignty, that's the country. So they also typically look at mature businesses and mostly look at equity as well. So those are the different types of investors that we have. We also have grant people who are willing to give you funding to be able to de-risk you a bit, because maybe at the point or at the stage your business is at, you're not yet marketable to either a debt financier or an equity financier. So I think those are, in a nutshell, the different types of funders that we have. But there are those who have a bit of overlap. And there's also crowdfunding, like Faith mentioned, who are more of a community approach to investing. So you could have $1 here from Lois, $3 from Faith, 5 from Charlene, and so on and so forth.
Oh, thank you for breaking that down. I think it's clearer to our team of entrepreneurs here, and just to dive a bit deep into each debt, equity, to faith. Um, what are the advantages of debt? How does debt financing look like? How does equity financing look like? What am I giving up? What is the advantage of equity? What should I look out for when I'm thinking equity? What should I look out for when I'm thinking debt? Because as an entrepreneur, I'm here trying to make a decision. Do I go the debt way or the equity way? So maybe just shed a bit more light on that.
Thank you, Lois, for that. I think I'll start with equity. So when you say equity, like I said, it's more of ceding a stake. That means we have dilution, whereby you're allowing another person to, of course, put in money and get a stake in the business. So what do you get out of this? Of course, as an entrepreneur, you don't get back, you do not repay back what has been put into the business. That's an advantage. There's also another advantage is we have new ideas coming in, because with new leadership, or rather with new people coming into the business, they probably have better ideas that will help you improve your business, improve your systems and processes, and of course, that shows, or rather that leads to an increase in the revenues, or rather improvement in how the business is going. For equity, we are also looking at that is now later, but now there's also like value in your business, because a business that has more investors, or rather more guys buying into it, the thing is the value of it over time tends to increase. And that's why you see, and I think we'll address it later, when an investor is exiting and another one is coming in, of course, we're looking at a high valuation. That means your business is valued high, and of course, that works for you. We will also address that. For debt, what you're looking at is ownership. Of course, there's no dilution. It's totally your business. but you tend to repay the facility. It could be an amortizing type of debt whereby you pay principal as well as interest. It could be a bullet whereby you just wait, repay your interest and wait to the very end. But the thing is, you'll have to repay back what you've gotten. Also, like I said, we have the interest that you need to factor into your business, because that, of course, eats into your profit. The good thing is also the lender in this case has no say in your business. So that means you could run your business as you've been doing, or rather in any other way that you wish to do. It's also faster. I must mention that maybe something I did not mention about equity. Equity takes a bit of time. Of course, we'll address that, but debt takes a bit of shorter time, between, let's say, 3 to 6 months works ideally. And also for debt, we have, it's risky. And I say it's risky because when you're having a debt and you need to repay, and we're looking at, let's say, issues with the economy, you still have to repay that interest. So of course you're at risk, probably lose your asset if at all you had a collateral or rather a security that you had put in. Also, we do not have strategic support from the lender, because like I said, all they bring to the table is the money that you need, and that's it. But compared to the equity, we have more to gain. Of course, it takes a bit more time. Of course, the dilution. But of course, if you need support with how to run the companies, around strategy, that works. Also, when the economy is not doing well, for the equity conversation, it tends to be a bit flexible for the business. That's it in a nutshell.
All right, thank you, Faith. And we are still with you. We had a question coming in and saying, isn't the cost of borrowing in Kenya too high? Please comment on that, on both debt and equity.
Yes, of course. That is someone who's keeping up with the tabs. Of course, the cost is high, but not highest. Of course, we have other countries that it's a bit higher than we have in our country. It's high, but like we said, if we need debt, that means we are looking to increase, or rather what we say, increase how the performance of the business in a short span. So of course it's high, but I'd say it's worth it, because if you utilize that debt as you're supposed to, that means you do get the returns, you're able to settle at that end, the business keeps moving. So yeah, it's high, but definitely worth it for the short.
All right. In the long run, it's worth it, because then you get to grow your business much faster, right? Yeah. Okay. So the second bunch of questions that came in really were on where and how do I start fundraising? Yeah. Some of the questions we had, how do I learn to fundraise? Where and how do we even start? How does one get a grant and seed funding? How can I get sponsors and partners to give seed funding? And I think exploring startup capital, preferably grants, where to start. Let's shed a bit more light on how do we start to how do we raise these funds? How do we do it? Perhaps maybe I can give it to Charlene. We can start, and the Faith can answer a bit.
Okay. Thank you for that, Lois. So where to start? First of all, before you fundraise, you need to get your house in order. That's the first place I'd say you need to start, meaning ensure everything is right, because at the end of the day, once you start fundraising, you're also going to give an opportunity to an outsider to look or get an intrinsic look into your business. So first, get your house in order. Next, you need to understand your why. Why are you capital raising? Because once you understand your why, you have purpose. Once you have purpose, you can now go to the next step. How much do you want? We prefer that how much you want be informed by your needs and not rather than a feeling. Because sometimes you can feel, if I get 10 million, I feel my business would grow. But when you do the numbers and get down to it, you find actually you could do okay with 5, or you actually don't need 10, you need 20. So how much do you want and for what purpose? Next, like you said, is what structure. I think based of to piggyback what Faith has said, she's given us the pros and cons of each capital structure. Do you want debt? Do you want equity? With each comes its advantages and disadvantages. Equity, you'll give up stake, but you could also get strategic input. With debt, you retain control. However, you have the repayment. But even with equity, there's a form of repayment in that the investor would require return on the investment. It's just that there's a bit of delay on it, whereas for a debt, you'll need to pay interest as soon as. And then you identify the funder. You could do this through an advisor like ourselves or Capital Connect.Africa, so that you can be able to identify the right investor that you would want to look at. And then you start to get into the investor conversations. So this is where you also need to find the right fit, because sometimes also approaching the wrong type of an investor can also mess you more than you were to begin with. And then craft your pitching or your storytelling. Here's where you need to channel your composition and your initial days, because you're trying to convince someone to buy into your business. And this will be better if you also have a good story to tell. So I think those would be my steps to fundraising. So how to get funding? Right now, there's a lot that you could use. You could use platforms like Capital Connect Africa. You could leverage AI. In Kenya, we have a few organizations that offer, I had you mention grants. We have ACF, we have the Africa Enterprise Challenge Fund, we have Heva Fund, MasterCard Foundation. Each have their own criteria. I don't know them at the back of my head. We have the KCIC, the Kenya Climate Innovation Ventures, Heva Fund. Those are few that I can think at the top of my head, but they are available.
All right. Thank you so much, Charlene. And I see questions coming in through the Q&A. Feel free to just keep dropping them. I will ask them at some point. And thank you very much for just adding those questions. So, in just identifying a funder, I know you've given, you've told us maybe we could use AI, could check out some of the different organizations that you have mentioned. But as an entrepreneur, when I'm looking for these funders, what should I look out for in a funder? What are some of the things, that should be my green lights or red flags, as, for lack of a better word, with a funder? Charlene?
Yeah, that's a very, very good question, because aligning your funding needs to the right capital partner is very key into a successful capital raising process. So I think what you'd like to look out for is, especially if you want to go the equity way, I think for debt financing is, one, do they have capacity to lend? Depending on how much you want to, is it something they're able to do? What are their requirements? Sometimes someone could be asking something that you're not in a position to deliver on. For an equity investor, especially, have they done this before? Because you don't want someone to be, your business is your pride and joy. You'd want to have someone who's also invested either in your country or in your sector before. So that means there's a history for, it's something you should look out for. Ask someone, have you invested in this sector before? Do you have experience investing in Kenya or in Africa? So those would be some of the green flags. Yes. Red flags would be the opposite. If you're in maybe manufacturing and the investor's stronghold is fintech, so you'd have to know, are we aligned? Because now some of the return on investment you'd be asking me for is not the same. Manufacturing and fintech company are completely different. Also, a red flag to look out for is someone who is a one-man show. You ask to, maybe, let me come to your office. They'll say, let's meet outside. It's okay, but now it comes to a point where you're like, okay, I need to assign some credibility. So those are some things to look out for. Also, sometimes you could ask an investor for what we call testimonials. What is the feedback people have to this investor? Is it, especially sometimes for an equity investment, you could give up a good seat. Do they add value? Because sometimes you want someone who has strategic insights, is going to help you grow from one level to another. introduce you to new markets and opportunities. So client testimonials is something also you could ask for. I think at the top of my head, those are some of the things I can think of.
I think those are very good points. What we are saying is, in as much as the funder is interviewing you, you should also be interviewing them as an
Exactly.
interviewer, right?
Yeah.
So it's not just one-sided. There was a specific question that asked, what metrics should we track to evaluate the success of a fundraising campaign? So I'm assuming this is an entrepreneur who's launched a campaign and trying to raise funds, what are some of the metrics that they should have when, as a business, you have chosen to run a campaign of this kind? What tells you you're doing a good job? What tells you maybe improve on this or that? I don't know, Faith, if you'd like to take that.
Maybe I can take that. When you say metrics, you mean metrics for the business or?
For the fundraising campaign, I am an entrepreneur. I have decided to launch, a campaign to, we have realized as a business we need funds, and we have set out a campaign to just find funders out there. What should that campaign look like? What are some of the metrics that will tell us we are on the right direction or in the wrong direction? Yeah.
Okay. Key metrics. I think just to reiterate what we said earlier, first of all, do you have a purpose? I think that is the first thing. So those are things you should look at. Your metrics is, do you have purpose? If you do, I believe you're already on the right track. Do you understand why do you want these funds and where you're going to use it? That's a key metric that you're on the right track. Do you have the correct documentation for you to be able to go on this fundraising journey? Once you have that, that is a metric. For your business, there are certain fundamentals that we have seen investors looking at. Traction, as much as you have proof of concept, what's your client base like? Do you have recurring revenue? Something else, what is your impact story? We are seeing that impact is driving a very key role in where investment goes. So it's very good for you to align your business model to an impact or a problem you're trying to solve. Also, once you understand those basics, I think you can say that you're on the right track. Before now, you can go into seeking the funders and then pitching your story. And also, it's good as you pitch, always ask for feedback. Even though someone tells you no, you can always ask why. That way, it also helps you keep improving and refining as you go on this fundraising journey. And they could also give you insights as to your business. The investors will tell you, your product does not have growth, you could reach a cap. And that's good feedback because that means you need to go back to the drawing board and refine a few things, and that could be quite helpful. Yeah.
All right, I really like that point. Don't get a no and just walk away. Ask why. Yeah, really good feedback. And you brought the impact conversation, and interestingly enough, we had questions on specifically, impact and all that. And the questions were, are there specific sectors in business that are most likely to get funding? And we have, someone in hospitality and events asking the same, someone in social enterprising financing asking the same. So those are sectors, but there are also specific business models that do get funding. Faith?
Yes, Lois.
Okay.
Yes, yeah, of course, yeah, we do have sectors whereby investors are more open to investing more than the others. And that is the tech and tech-enabled, the likes of fintech. We have the insurtech, edtech, health tech, and all that, climate tech. We also have agriculture and agribusiness. Investors tend to lean more on that. We have social enterprises. Renewable energy is also a sector that most investors are looking at. We do have health as well as manufacturing. We do have FMCG as well as financial institutions. When we say that we have investors looking at that, it does not mean that we do not have investors also looking at hospitality and the rest. Just that more investors are more inclined to the said sectors. But of course, any business that has got traction and has a proven concept is actually a fundable business model.
Okay, just on that last point, when you say when any business that has traction, what does that mean? What is traction? What do they consider as traction?
So when we say traction, we are looking at, do you have the numbers? In this case, right, do you have clients? How many clients do you have? How much have you sold? How much money are you making? If it's a tech business, how many users do we have? What are the engagements? Maybe the frequency. What are the conversion rates? If we have partnerships, could be the strategic partnerships. How many do we have? How many contracts do we have, if at all it's maybe business to business? Do we have testimonials? Do we have repeat clients? Maybe if we say that we have clients who pre-order, how many of those do we have? How many awards now on the side? Assuming we have awards given, how many awards do you have? Yeah, so there are things like that, those, yeah.
All right, great. Noted. Let me just go to the Q&A and just pick a few questions from the conversations that we've had already. We have someone asking for debt. Do we have convertible notes available? And what are the requirements for such type of debt? I'll request Charlene to take that. But also David Nene is asking, or is saying thank you for your insight. Assuming you have an angel investor already, but the cash is not enough for scaling, is it advisable to consider equity financing while the angel is still in? And I'll hand that over to Faith. So I'll start with Charlene.
So my question is the angel investor, the
Convertible notes, yeah.
Yes. Oh, okay. Convertible loans. Yes, convertible loans do exist and they're available. So the thing about convertible loans, you also have to understand at the end of the day, it's a way for you to acquire capital because I think like what Faith mentioned, we use it when we are structuring, especially when we know the equity process can be very long. It can take, especially if you're regulated, for example. So you can find an investor who truly wants to get into your business. They'll say, okay, we'll give you a portion of this funding request as a convertible loan to be converted later to equity. So this does exist primarily with institutional investors because a typical bank, for example, would not consider that as an option. They want to give you the money and stay at arm's length and receive their interest payments. So they do exist with institutional investors with the possibility that it will convert to an equity proportion. So yes, they do exist.
All right, thank you. Faith, on the angel investor, and if you could please switch on your camera.
Yeah, I'm having a bit of technical challenges.
Yeah,
So the frequency will have an issue, but yeah. And maybe just to add on what Charlene has said, on the requirements of convertible notes, like the participant asked, you need to agree on some of these items like the interest rates, what is the maturity period. You need to understand the conversion trigger could be the next milestone. What are the discounts that we are looking at? I think she's mentioned the valuation cap. Also, I need to emphasize the legal documentation. You need to understand the mechanics around the conversion. What are the rights upon dilution? You also need to look out for that. You also need to understand compliance, matters compliance now after, of course, the conversion. And yeah, the investor. And maybe just to mention, my query was around
the angel investors. You have an angel investor.
Yes?
Yeah, you have the angel is an investor, but the cash is not enough. Is it advisable to consider equity financing when the angel is still in?
I believe yes, assuming you have an angel investor. Did I get well? So we already have an angel investor on the ground, right? And the participant is asking if it's okay to add equity financing, right? Yes, it's actually advisable, tends to make sense. And the reason as to why this is advisable is because angel investors tend to expect like follow-up rounds. They just don't believe that because they've put in money. That's the end of it. They understand that the money they have put in could work at this point, but is not sufficient to help the business scale. So yeah, definitely you need to top up on that. Also, we need to understand that with equity investors coming to the table, we have more strategic partners, and that works for the benefit of the business. We also, I think I had mentioned it earlier, we're looking at uplifting of the valuation, whereby the valuation of the company tends to rise as we have more equity investors coming to the table. And of course, onboarding more equity investors sort of distributes the risk of the business. That means the risk of this business does not fall entirely on the owner of the business, or rather the entrepreneur and the angel investors, but we also have the equity investors who tend to take the risk as well. So yes, I do believe it's a strategic move that could work. But of course, we do need to align with the angel investor before we onboard a new equity. Yeah, we need to be open about that.
All right, thank you. I see our time is far much gone, but I'll just try and answer a few more questions. I'd like to combine Mary Charlo's question. If you're looking for funding for assets, say a printing machine, what funding option can one pursue other than banks and SACCO? And whilst you're answering that, perhaps you could answer what is the best time, at what point should an entrepreneur be thinking about fundraising? And what are the exact documents in terms of preparation should they have? Faith, you can proceed.
I think
your mic is still on. Okay, let's start with Faith and then Charlene can add.
Yeah, I'll start with when to fundraise. That's a very good question. We normally advise businesses not to fundraise when you need the money. Because like I had mentioned earlier, by the time you need that money, that means you're almost desperate. Like we said, the fundraising process is it's a journey. It does not happen overnight. That means you need enough time for that. You need to be invested, of course, with time, emotions, and all that. But also we advise clients that you can fundraise when you want to expand your business. That means you're looking to grow. Could be in another town, another county, another country, adding new revenue lines or other products into the business. You want to get stock. You want, that is ideally working capital. You also want to get assuming assets. And in this case, we're talking about, let's say, machinery for your business. That is when you can fundraise.
So basically what you're saying is, as an entrepreneur, you should have foresight, to realize that perhaps next year, this is what we're going to need, and perhaps that journey as early as now.
Yes.
Yeah? All right, great. Maybe Charlene, you could help us respond on the documentation that is required. What kind of documentation is required with fundraising?
Okay, that's a very good question. So typically when you're fundraising, I'll answer if you're doing maybe a non-conventional capital raising, meaning it is not a bank or a SACCO. I will start with either you're raising through an institutional investor, a PE, VC, and the like. So typically the process or the documents you'd need is one, our process is like, first of all, we need to understand, are you investor ready? Are you even ready for that capital raising? Sometimes you could think you are, but you're not, your business is not prepared that an investor can come in. So one, that's the first thing we do, checklist to do your investor readiness checklist. Then we go into investment preparedness, where you do preparation of investment documents.
Charlene, we can no longer hear you. Charlene, maybe you could. Okay, Faith, please take over. All right. I bet they are having a network issue, but Charlene, you're back.
I'm sorry about that. It dropped off. Yeah. So I think I was talking on the investment documents required for capital raising. So once you complete the investor readiness checklist, we go into investor preparedness. This is where we prepare the investment documents. So the documents you'll need is one, a teaser. This is a document that has a brief snapshot of your business, touching on your business model, where you're based, when you were founded, a financial summary, looking at a historical trend, as well as financial forecast, and then your ask, your funding ask. So that is how much you want, for what purpose, and in what structure. So that can be either equity or debt. So that will be your teaser. Then you have your pitch deck, which is basically your storytelling. This will touch on the market you operate in, the business model of the business, your team, your governance structure, your financial forecast, your strategy for your business, and then now your funding needs. So that's your pitch deck. And then you'd also need a financial model. This is a 5-year forecast that shows the growth trajectory of your business, especially considering the funding that will come in and what that looks like in terms of numbers for your business. That's the funding you're requiring. What can it do for your revenue? And then you'd need a valuation, especially if you're going into an equity conversation, just for you as an entrepreneur to understand your worth as a business, so that when you go to the negotiating table with an investor, once you understand your worth, you're able to have better negotiating power. And then we also do due diligence checklist, so that you prepare for due diligence before the investor comes to the table. This ensures a very seamless transaction process. So those are some of the documentations that you'd need if you're going into a capital raising journey.
Okay, all right, great. You've spoken on valuation. What determines the value of your business?
Okay, so what determines the value of your business? We say, first of all, it's important for an entrepreneur to understand that there's a difference between price and value. So sometimes as entrepreneurs, they're very emotional about the value of their business, of which is quite understandable. But you would also need to approach capital raising from a very pragmatic point of view, where you understand the value of the business is also how much someone is also willing to come into your business at the price at which someone is willing to come to your business at. So valuation process, typically we use a number of things. So your financials are key, which drives the valuation of your business. So financials are actually the key or the bread and butter of any valuation.
Okay, all right. So to Faith, Kibe is asking on debt section, do they have other debt financiers except banks, MFIs, and SACCOs? And while you're answering that, someone is also asking, how do you typically balance equity versus debt when advising clients in fundraising transactions? And maybe also answer, I think this is a follow-up question for convertible loans. Can the conversion to equity be waived at the end and simply repay the loan in full? Faith? Okay, I think Faith is not yet here. Charlene, please proceed.
Yes. All right. Hello.
Oh, Faith is back. Yes, Faith, please. Yes.
Yeah.
Hello.
No, technical difficulty. I'm sorry about that. Yeah. So
Yeah.
alternative.
Sorry, Faith, you are perhaps it's a network issue.
Facility to the businesses. We do also have digital lending platforms, the likes of, we have MFIs, we do have the likes of Rafiki, we have the likes of Edenbridge, that they could give that. We also have institutions that do asset leasing and or as well as hire purchase. We have impact investors as well as, of course, you could also get from grants. So yeah, we do have other sources, not just from the typical or rather the traditional banks and SACCOs. Yes.
All right. And how do you balance equity versus debt when advising clients?
How we tend to balance the two, we tend to look at, of course, the business in this case. There are things that we're normally very practical when it comes to this. We want to understand, okay, what is this business we are looking at? we need to understand what are the debt to equity ratios, because for the business and also for the sector, because the debt to equity ratios, let's say for fintech, could be different from those of our financial institution. Okay.
Faith, I think you're having a bit of a network issue.
What the client wants, because ideally,
Faith, we are unable to hear
yes.
you. We are unable to hear you. You're currently hanging. Okay. Perhaps Charlene, could you pick up? And whilst at it, please answer for convertible loans. Can the conversion to equity be waived at the end and simply repay the loan in full? Charlene?
Yes, I think I can take that. So if I heard you right, you're saying if the convertible loan can revert to just a normal loan, right?
Yeah. Can the conversion to
Yeah.
equity be
So
waived
yes,
at
it
the
can.
loan? Yeah.
So if it's within the terms and conditions of the financing agreement, yes, you can. However, you sometimes for the convertible loan to happen, maybe you have been given the interest rate at a discounted rate. So we have seen clauses put where in the event of the convertible loan reverting to a standard typical loan, the interest rate kicks in at market rate. So if you're ready for that, that is also well and good, because if I invested as an investor, if I invested in you knowing that this could convert to equity, then you know, either depending if both have rights to revert it to a standard loan, then you'd find that as an investor to protect my interest, I will probably take it to a market rate, especially if I will not have the delayed gratification or the benefits of having an equity stake in the business. So if those are some of the pros and cons you'd have to weigh before triggering such a clause.
Okay, all right, thank you. I'd like for us to close in the next less than 5 minutes. But there's a question on the Q&A by Patrick, which I think is, it's only just that we answer this. Are there common strategic missteps you have seen Kenyan businesses make when approaching investors? Yeah. And we also have a last one. How can one raise capital via grants and where to get them? I think this is the last set of our questions. However, even as we are coming to the end, I think Robert had mentioned that we have some goodies for the attendees today, that as long as you have registered for this session, you are privy to get an opportunity for a coaching session that will just guide you to this, both from WYLDE and from Raisin Capital, just to advise you on the way forward. So do get in touch with us for that session if indeed you are interested in having just a coaching session to deeply get into what your business is about. So that is up for grabs. Be sure to check it out. So over to you, Charlene, as you answer the last two questions.
Okay. So common mistakes typically made by entrepreneurs or businesses when looking for investors, I think Faith said it, raising when you need and not when you want, meaning there's some sense of desperation when you're doing the capital raising. This can maybe lead you to taking deals that are not let's say, the best for you at the time. Also, there's lack of proper documentation, like I said, especially when you're approaching institutional investors, the investment documents that they typically look out for. So sometimes you don't have them or you don't have them in the right format. That could make some investors shun away from you in spite of you actually having a very, very good business model. Also, there's either overestimating your value. Like I said, especially when it comes to an equity conversation, you also have to understand the difference between price and value. And sometimes those are the situations in which sentimentality with the business can lead someone to actually saying no to a very good deal on the table. Another thing is also sometimes not having an advice on the table. That is where people like us and Capital Connect Africa come in, where we can handhold you through the fundraising journey. Also pitching to the wrong investors. Like we said in the beginning of the session, we categorize the investors based on the type of businesses they look at. So if you're an early stage business, but you're looking at a private equity firm, because of that misalignment, you could be told no, and you're wondering why. You're an investor, I'm a business. So trying to understand the different criteria that investors have is very key when trying to pitch your business. Sometimes also having either weak financial projections or overly estimating your financial projections, where an investor looks at those numbers and says, to be honest, that's not achievable. You're trying to oversell, and the business model in itself is okay, but I feel there's something wrong with the numbers, and also not understanding your business. Storytelling is very key to capital raising. So it's very key for you as a business or an entrepreneur to understand, one, your business, and also your value proposition. What problem are you solving? Do you know how to sell it? What's your unique selling point also that differentiates you from your competitors? So those are some of the common mistakes. I don't know if I've left any. Faith can chime in.
You've covered it well, Charlene.
All right, thank you. I like that you have mentioned business models and all that, getting your house in order, and that's where WYLDE comes in. You want to understand if is your business model fundable, and so WYLDE International will help you with that, while Raisin Capital will help you in connecting with the funders themselves. So you see, you have the right team here as you are doing that. So as we complete, Faith, I'd like to take in your last or your closing remark. If there is one thing you'd tell an entrepreneur who's thinking about fundraising, what is that one thing that you'd tell them to just keep in mind as they are doing this? And Charlene, over to you. What would you tell an entrepreneur who already has an existing business and perhaps is just looking, to make a decision on how to expand and, figuring out who's the best to support in that? So, Faith, your closing remarks.
Thank you, Lois, for that. My closing remark will be start now. You do not have to wait till you really need this and you're desperate and you're almost closing your business. Start early. Also, you do not have to walk this journey alone. We are here. WYLDE is here to support you with the modeling, the business model. In case you don't have that in order, we are here to support you and match you to the right investor. So you do not have to walk alone. Always reach out, start early, and also be clear on what you want, because there is so little we can do on our end. We need you to have a vision for us to support you in that. So ensure that you're clear on what exactly you want. Then from there, now we can be able to support you. Thank you.
Thank you. Charlene?
I think what I can tell an entrepreneur who wants to expand is, once you understand your purpose, your vision, where you want to take your business, I think everything will fall into place. Also, you have to understand your business to a degree so that when you're expanding, you also have to understand why, where. Is it new clients? Is it new products? Is it new markets? Have you saturated where you are? So I think sometimes when we say expand, we want to expand before we have actually saturated what is within our reach. So those are the things I would say maybe before you expand your business. Those are things an entrepreneur should take in at the back of their mind.
All right. Thank you so much, Charlene and Faith, for joining us and for sharing your insights. We really do appreciate for making time and sharing this information. And when Raisin Capital and WYLDE say we handhold entrepreneurs through this process, we mean it. And that is why we have the coaching session in place after this to just help you curate a better path for yourself in the journey to fundraising. And so I hope you have enjoyed this session. I hope it was useful in enough and informative enough for you. I'd like to thank each and every one of you. I see Robert's cam is on. Is there something that you'd want to add as well as we are closing?
Yeah. Thank you so much, Lois. I think for me, whenever I attend these sessions, I usually think I know everything, but at the end, I usually find myself just writing down so many things, and I think that's thanks to Charlene and Faith, who we have here as our experts, and yourself as well, Lois. To our audience, I typically when we're in a physical meeting, I would ask you to just give them a round of applause, but the Zoom platform also allows us to do that. If you go over to the bottom of your Zoom platform, you'll see a button written React. Please, let's just give them a round of applause for that, expert walkthrough of how to fundraise if you're an SME. One of the things that we always tell SMEs is always take advantage of these sessions. Sometimes this kind of advice or this kind of lessons can be very, very expensive and very unattainable for most SMEs. So whenever we get an opportunity and have experts who are willing to share their time and expertise with us, I think it's always important to appreciate them. Maybe as we close, let me start by thanking all of you who've managed to stay with us all the way till the end. We know an entrepreneur's time is very, very precious. So for you to spare 1 hour out of your time, maybe you're in your shop. I don't know whether there's anyone who's closed their shop to be able to attend this webinar. So we really, really appreciate you and your ability to join us during this morning. I'd also like to thank our partners, Raisin Capital. We wouldn't have been able to do this without you, represented here by Faith and Charlene. You guys are gurus, and we are so, so grateful to have you guys as partners. As always, Lois, our moderator, thank you so much. It's not easy to keep people engaged, especially the way it's cold in Nairobi. And people have sweaters. It's very easy to doze off, but I think you kept us very, very engaged, and we are grateful for that. To all the participants here, please do not worry. This recording will be shared with you in the emails that you registered with us on. So you'll be able to go back and get some nuggets from everything that Faith and Charlene shared with us. We'll also upload it to our YouTube channel. Please subscribe to our YouTube channel. We will upload this video shortly after this so that you can be able to always go back and reflect if you have any questions or any nuggets that you wanted to pick from this conversation. As Lois has mentioned, we do have some goodies for you. We always have goodies for entrepreneurs. And I think with that, the goodie that we have here for you is in an effort or in our commitment together with the Raisin Capital to support you through the fundraising journey or the fundraising process, we would like to present to you the Capital Connect platform. As Faith, or I believe Charlene had briefly touched on it, the Capital Connect platform is a platform designed for SMEs such as yourself to support you in your fundraising journey. Using the Capital Connect platform, you can answer perhaps one of the most critical questions when you're looking to fundraise for your business, is, are you ready to fundraise as an SME? And once you're able to answer that question, and if that answer is yes, then the Capital Connect platform will be able to connect you and guide you through that whole process and connect you with various investors who are right or are right match and fit for you. Through our partnership with Raisin Capital, we are able to offer you this platform just by the virtue that you attended this webinar. You'll be able to get it for free. Yeah, I repeat again, you will be able to get it for free by the mere fact that you attended this webinar. So we are going to drop the link for you in the chat section. Please go over and interact with the system. It's a very, very, very great system, and it's not going to be free for long. In fact, I would urge you to perhaps utilize it within the next 7 days, because after that we will perhaps be looking at closing off that opportunity. So go over there, interact with the system, see what the system has to offer. You never know. Maybe that investor is just one click away from joining your business and helping you grow. Additionally, if, for example, or if the answer to the question on whether you should raise or not is no, WYLDE International is here for you. It's not the end of the road. We are here to support SMEs like you so that you can have a look at your business, get clarity, get structures. I think as you heard from our experts today, it's very, very important to have structures within your business. And that's what WYLDE WYLDE is here for. So one of the other goodies that we're going to offer you is a 1-hour discovery session with one of our consultants who'll sit down with you, walk you through, understand your business, and perhaps figure out where are you as an organization. Do you have the right business model? And fundamentally, if you're ready to raise, then you should be able to work with us through our partners, Raisin Capital. So please go over to the chat section. There's a form there for all of you who are interested in that 1-hour free discovery session. Please pick it up and have a conversation with us. As I mentioned, sometimes these services may be unreachable, for SMEs, but we are very, very happy due to our commitment to supporting all of you to offer these services for you and hopefully work with you through that entire journey. As I close, we would like to play for you just a short video so that you can get a better understanding of how the Capital Connect platform works, so that when you go there, you can utilize it to the maximum. So after I'm done with my speech, please just hang on for about 30 seconds or a minute. We'll be playing a video for Capital Connect platform so that you can get a better understanding of how it works, so that when you go there, you're not guessing, you know the right place to go or the right things to do, so that you can get the most out of that particular tool. Remember, as has been mentioned by experts, this is not the end. Feel free to engage with us. Our socials, both WYLDE and Raisin Capital, are in the chat section. Please connect with us. Follow our social media channels. We have our phone numbers there, our emails. Drop us a line, and we'll be happy to connect with you and see how we can support you in whatever shape or form. I think with that, let me close there and thank you all once again on behalf of WYLDE International. This has truly been a great session and perhaps one of the best ones that we've had. Please look out for our channels for other sessions like these. We will be having a series of experts who will be joining us between now till the end of the year, based off certain topics that we believe will be able to support you as an SME. The way we've designed these sessions, as you've seen with this, it's no fluff. No theory and your typical panel discussions. No, it's answers that you want, or getting answers to the questions that you want, and we are happy to do that, and we hope that you'll join us for the other conversations that we'll be having throughout the course of the year. So with those very few and many remarks, thank you all once again. The video is going to come up shortly. Thank you, and have yourselves a good day.
As an African business, one of the biggest challenges is access to capital. Whether it's a new idea, a business ready to scale, or a mature company looking to expand beyond borders, funding remains a major barrier. Capital Connect is Africa's capital-raising marketplace, designed to make the process simpler, faster, and more affordable. On the platform, you'll find access to over 4,000 investors, automated and one-on-one advisory sessions, capital raising tools, and market insights. To help you prepare, be investor ready, connect with investors, and move from planning to funding with confidence. Whether you're looking for equity, debt, grants, or blended finance, Capital Connect supports you across all capital structures. Visit www.capitalconnect.africa to begin your journey to a smarter way of raising capital.
In the world of business, particularly with small and medium-sized enterprise, success requires more than hard work. You need a special ingredient that can actually help you to accelerate your business and to become successful. I'd like to introduce you to Scalarizer. Scalarizer is a concise and affordable strategy workshop that comes to you in a bite size and in a way that actually allows you to consume it within a very short period of time and to achieve the basic steps that you need in your business to succeed. This one-day workshop condenses weeks of knowledge into practical action that can help you get to the success points that you need to implement in your business. Over the last 3 years, more than 104 businesses from more than 10 different sectors and industries have taken the Scalarizer program. These businesses have reported 50% growth in their revenues within 3 to 4 months of taking the program. The Scalarizer program is designed for SMEs who have been in existence for more than 3 years and have a turnover of more than 3 million Kenya shillings. The Scalarizer program works perfectly for business owners or entrepreneurs who are passionate and are looking for exponential growth in their businesses. The Scalarizer program is delivered by experienced business strategists who have been working with SMEs over the last 10 years. During the Scalarizer workshop, you will interact with other entrepreneurs and learn from them. You will be taken through practical exercises that are relevant for your business, and you'll also receive hand-holding support that is specific and meets your business right where you need the support. Visit our website to learn more and secure your spot in our next Scalarizer workshop. Unlock your business potential now.
As an African business, one of the biggest challenges is access to capital. Whether it's a new idea, a business ready to scale, or a mature company looking to expand beyond borders, funding remains a major barrier. Capital Connect is Africa's capital-raising marketplace, designed to make the process simpler, faster, and more affordable. On the platform, you'll find access to over 4,000 investors, automated and one-on-one advisory sessions, capital-raising tools, and market insights. To help you prepare, be investor-ready, connect with investors, and move from planning to funding with confidence. Whether you're looking for equity, debt, grants, or blended finance, Capital Connect supports you across all capital structures. Visit www.capitalconnect.africa to begin your journey to a smarter way of raising capital.
In the world of business, particularly with small and medium-sized enterprise, success requires more than hard work. You need a special ingredient that can actually help you to accelerate your business and to become successful. I'd like to introduce you to Scalarizer. Scalarizer is a concise and affordable strategy workshop that comes to you in a bite size and in a way that actually allows you to consume it within a very short period of time and to achieve the basic steps that you need in your business to succeed. This one-day workshop condenses weeks of knowledge into practical action that can help you get to the success points that you need to implement in your business. Over the last 3 years, more than 104 businesses from more than 10 different sectors and industries have taken the Scalarizer program. These businesses have reported 50% growth in their revenues within 3 to 4 months of taking the program. The Scalarizer program is designed for SMEs who have been in existence for more than 3 years and have a turnover of more than 3 million Kenya shillings. The Scalarizer program works perfectly for business owners or entrepreneurs who are passionate and are looking for exponential growth in their businesses. The Scalarizer program is delivered by experienced business strategists who have been working with SMEs over the last 10 years. During the Scalarizer workshop, you will interact with other entrepreneurs and learn from them. You will be taken through practical exercises that are relevant for your business, and you'll also receive hand-holding support that is specific and meets your business right where you need the support. Visit our website to learn more and secure your spot in our next Scalarizer workshop. Unlock your business potential now.